Canadian investors flocking to the US and short-term rentals, but I'm going to put them under one kind of umbrella topic, which I'll call betting your real estate portfolio and betting the farm on a particular tactic or a particular strategy. Yeah. And I want to get your thoughts on this, Patrick, because you've been at real estate longer than I have. You have a more established portfolio. You're not interested so much in growing it, and also you're kind of looking further out in terms of global economics and so on and so forth than I am. My question is this: there's a lot of investors, and what are your thoughts on people betting the farm on a particular tactic? I see a lot of investors nowadays, they're literally selling all of their real estate in Canada and going all down south. They're putting it all into the US, whether that be through other partners or whether that be them actually buying titles in the US. I see people doing that. I also see people converting their entire portfolio to short-term rentals or just doing short-term rentals in terms of real estate. And I look at this and I ask myself the question like, wow, I see that as a big swing. And yes, it could look like it's very, looks really great on paper, but man, everything ebbs and flows in this world. And you got to be damn sure about yourself to put it all on the line on a particular tactic, not something I'm comfortable with. What are your thoughts?
Well, I think there's always a risk in doing that if you're not really paying attention. We look at the short-term rental world, and even, let's consider Airbnb. So when we look at what's happening in a particular region, let's say you go in short-term rentals, it all looks really good. Maybe you're doing a short-term rental in a particular condo. Things are great. Oh, geez, I'm going to buy 2 or 3 more units in this building because I'm getting such great rents. Well, then there's a risk, for example, which happens quite often that we don't necessarily hear about, but it does happen quite often, which is that NIMBYism that shows up. Because if I'm in a building and I own a condo unit and I'm paying that strata, I'm there to live. And if all of a sudden the board says, well, something we also within our strata have, say we can do short-term rentals, well, that could be very disruptive. Well, then the next thing you know, you have a bunch of permanent residents who get together and go, this is BS. I'm tired of the disruption. I'm tired of the people walking in and out. I feel at risk. Maybe there's been a couple of security issues. The next thing you know, guess what? You can no longer do short-term rentals in that particular building. And that can be a strata, by the way, whether it's in a building or even in a slightly gated community, for example. These are things that we're putting at risk. So when you go all in on a particular strategy, you better really understand what the dynamics of that area are. That's just one example of what's going on. Now, as far as going into the US, it doesn't really change. The US has some of the same issues that we've got. And I know we're not talking about interest rates per se, but I also believe, and what I'm seeing is that I think the US interest rates are going to go higher than what we're seeing here in Canada. And that's more of a long-term picture. But at the end of the day, this is all plays into the short-term rental issue.
Yeah. So, and you're speaking from experience, by the way, of the short-term rental issue. This happened to one of your properties. Like, imagine you would have went all in on that and got 3-4 units in that building. Next thing you know, they say no more short-term rentals, and you had sunk a whack load of dough into that conversion. I remember. I mean, it was, that could have been very painful. Luckily, you're established and you can soak up those kinds of things. But, someone just starting out, that could have been the end of or that would have definitely set them back several years.
100%. And I had to pivot, and I did pivot, and it worked out to be okay. I have absolutely no regrets in terms of the money I put into that particular unit. And it turns out to be a great long-term furnished rental, which I keep getting great clients for. I've been very fortunate that way. But I'll tell you what, going through the hassle of the board coming at me was really kind of, I didn't want to do it. And so imagine if you've got a lot of capital sunk in. And that was, by the way, that was actually a mature unit. And so it's not like I was in deep from a cost perspective in what I had to carry. So, as I went through that transition, I had to deal with a couple of issues with the board. It sat empty, all of those things that went on. So if you run into that same issue and you've got 2 or 3 units in that particular area or in that building, that can get costly and be way more stressful.
Now, I actually love short-term rentals, just so everybody knows. I'm a big fan of short-term rentals, and I think short-term rentals make a great part of your tactic, part of your strategy, especially if you have a portfolio of 4 or 5 properties. Converting one of your units, especially a unit that's in a duplex or in a triplex. I love triplex Airbnbs because you have 2 other long-term rentals to carry the property. So even if you're empty on the Airbnb, on the short-term rental, you're still okay. But converting 1 or 2 units on a 5 or 7 or 10 unit portfolio is a phenomenal way to get better cash flow and to increase your ROI, but you don't jeopardize your financeability, which that's a big issue with short-term rentals, is if you really need to, if you want to refi and get your capital out and take some equity out of your portfolio in order to continue to grow, if you have a bunch of short-term rentals, I'm telling you, it's going to be very, very difficult. There's ways to do it, but it's a lot of work. And so just be cautious about that. But converting a couple units to short-term rentals, I love the idea to bolster cash flow. I think it's a good cash booster strategy, if you will.
But I think, yeah, and I agree 100%. So it's not that we're against short-term rentals, but to go all in, which is what the topic is really about, is something that you have to be very aware of. I think that at the end of the day, if that's your plan A, you better have a plan B should something go south within the rules, the regulations, whatever might happen. So there's a little bit of riskiness in that. And so that's what I would consider. That's your plan A, what's your plan B?
Let's talk about flocking to the U.S. I'm seeing a lot of investors flocking to the U.S. Whether that is expanding to the U.S., I see that as different than selling everything in Canada to then go to the U.S. as a Canadian citizen. I think there's some interesting kind of things you have to ask yourself there. But what I ask you, Patrick, is, a lot of investors, especially rookie investors, I would say, or newer investors. I don't want to call them rookies, sounds bad. But anyways, newer investors, what happens is they go to a market like, 45 minutes away from Peterborough here is a market called Marmora. And Marmora literally has 1,600 people that live there. I've made this joke before, but you can buy a 16-unit building there for like 400 grand, right? So it's like, oh my God, $400,000 for 16 units. That's great. It cash flows like crazy. No one has jobs over there because there's no jobs. But the point is that there's a few markets like that in Canada, but there's a lot of those markets in the US. And there's a ton of markets in the US where you could pick up property for really, really cheap that on paper appear to cash flow, not supported by economic fundamentals whatsoever, but appear to cash flow on paper. And a lot of Canadian investors are flocking to the US and putting their money into those kind of big multifamilies, 50-unit buildings, 60-unit buildings, 70-unit buildings. There's a lot more of them over there. What are your thoughts on this? I mean, I'm kind of raising a red flag here saying, I don't know, I'm not sure about this. I would be doing some serious friggin' research before I move money into that market.
Well, I think it's because of the hype around it that there should be a red flag around it, at least a yellow cautionary flag, right? Is to say, okay, just slow down a little bit. Here's what I'm observing, and that is that the investors that are really taking it on, they're actually going there. So they're spending time there. They're doing their research there. They're actually immersing themselves in any given market and really spending time doing their diligence with what's going on. As in, just because Florida and Texas seem to be the most open, states, doesn't mean everybody that they're not running in there. They may be going to Texas, they may be going to Florida, but they're actually doing their diligence in that regard. That's far different than those that are saying, gosh, everything's hot in Florida. I'm going to put a bunch of money into Florida. This looks like a great deal. And they're not actually understanding the economic fundamentals of that. As I've said before, I think that we have to look at the lag time that's happening. And US is no different than Canada. As a matter of fact, I think the US is going to get hit harder in the future than Canada is on an economic scale, just because of where they sit in the global picture. And when we look at rates, I mean, it's been very, very clear. It's been made very clear by the feds in the US that interest rates are going to continue to rise until something happens with inflation. So there's pundits there, and I mean pundits, I mean banksters that are actually suggesting that we could see 7%, 7.5% interest rates in the US. Now, if that's the case, then we have to look at the economic fallout of that and the lag time. So if interest rates hit 7%, I don't know, let's just say 7% in the next couple of months. Let's just say that's the case. Then it doesn't immediately, it has a short-term effect, but the ripple effect, if you will, or the long-term effect in the lag doesn't show up for probably another 12 to 18 months. And then that's where you start to see havoc. And of course, when you look at what's happening in the US, I just want to add to that right now, like Canada, employment is very, very strong. They're like 3.7% or something. They're under 4% in their unemployment. That speaks volumes to what's going on economically. But if we see that lag hit, we could see job losses in 2023, later in 2023. And guess what? That's going to have an impact on real estate. So it's all to say that the yellow flag is up. if you're going in there, you better be doing your diligence and be looking out at least a couple of years of what you see happening and thinking about what is your exit strategy and your time frame.